Howdy, folks. My video yesterday saying the dip is over, but clearly it's not, and you called it to a T here, saying tech stocks won't hold up. They will drop in this Easter Monday. Yes, tech stocks are getting absolutely hammered. A lot of fear heading into this earnings season, but this Easter Monday, guys, looking pretty abysmal, but is recovering into the latter half of today. So not the worst with the volatility we've seen in this market. To see 1 to 3% drops in our favorite tech companies, probably not the worst day we're going to experience even moving forward. But thanks to you beautiful buggers leaving comments, questions down below makes this a video even more fun as you get some insight into my personal life and stocks that I find just generally intriguing. And if that's a conversation you'd appreciate, hit that like button as we get into question numero uno from Thanos saying, hey, it would be nice to make a dedicated video on TD Bank. How safe is the bank? Should people take their money at a TD Bank? How safe is TD Bank? And honestly, if everyone did a bank run tomorrow, we all pulled our money out, TD would be an abysmal situation. And I don't think that's ever going to happen. And I'm going to give you my personal opinion here, obviously not financial advice, but I think TD Bank is a buying opportunity of a lifetime right now. It is trading down a little bit here coming into April 5th. It's the most shorted bank globally, which is kind of surprising. I think 4% of the total outstanding shares are currently short. It is trading toward its 5-year low here, which is nice, with almost a 5% dividend yield and trading at a discount to its prior history and to the general markets, which is something that I find very intriguing. So why is it the most shorted bank? Reason numero uno is they own 10% of Charles Schwab Corporation, which is a lot of fear around these U.S. banks after Silicon Valley Bank tanked, being more of a regional bank. It's a huge bank, though, at $90 billion. But nonetheless, the CEO of this company came out, so they have lots of liquidity, 10% ownership, not the end of the world for their total balance sheet being, TD being almost a $145 billion company, much bigger than the likes of Charles Schwab. Very intriguing stuff on that aspect of it, but we have to dive into why it's the most shorted bank. It has nothing to do, I think, with the Charles Schwab ownership. I think it has to do with their purchase they're trying to make of First Horizon. A lot of these big banks, especially in Canada, are trying to acquire companies right now. Royal Bank, the largest bank in Canada, is trying to purchase the Canadian counterpart of HSBC Bank, and we're also seeing Toronto Dominion Bank, the second largest company in Canada, try and buy First Horizon, which would make it the 6th largest commercial bank in the U.S., which currently sits around the 10th largest bank, according to the Federal Reserve. So this is something to just watch, pay attention to, because if this deal doesn't go through, it's a big problem. If it does go through, is it going to go through at the prior discussed, numbers? Because clearly the bank's losing value right now, so it's scary to be acquiring businesses when while you're sitting there doing due diligence, the value is dropping. So that's some of the fear. But look at the numbers here. TD Bank, their profit margins are incredible. If we just take a look, profit and operating margins sitting in the 30% range, which is astounding. Those are incredible numbers. You take a look at 58%, 60% of this company's outstanding shares are held by institutions, so it offers some stability to the stock price, even though 4% are roughly short as it stands today. But you got about a 44% payout ratio, so the dividend's very reliable and sustainable. They can take a hit if they have to continue to do more loan loss provisions, protect themselves from faulty loans. But I don't think this is 2008. I think they were pretty stingy on handing out real estate loans as it was, but that's another reason it's being shorted. People think the Canadian real estate market is a bubble, and that huge exposure to Canadian real estate, U.S. real estate, banks have good reason to be fearful of in this market, but that leads to a buying opportunity. You want to buy when there's blood in the streets, because these banks will not go anywhere. They're going to be around. They're like Pokemon cards. Just collect them all, collect the biggest ones, sit back, relax, ride it out for 5-10 years. You're going to be making money. I promise you that. Leading us into question numero dos. How do you verify that a company's stock is eligible for Canadian dividend tax credit? For example, RioCan. So let me clarify this real quick for those of you that are unaware. What is an eligible dividend tax credit? Well, basically, an eligible dividend is any taxable dividend paid to a resident of Canada by a Canadian corporation that is designated by that corporation to be an eligible dividend. What does that mean? A company in Canada that makes over 50% of its revenues in Canada that pays a dividend to a Canadian resident, the Canadian government says, hey, you're supporting the economy, we're going to give you a discount on the dividend. I think typically the dividend will hang around 15% taxable. So even if your tax bracket's higher than that, you'll only pay 15%. I could be wrong, but nonetheless, there is a quote in here that is kind of annoying, and that's RioCan. Unfortunately, REITs are considered distributions. They're not dividends, so you do not get an eligible dividend tax credit. You just pay regular income tax on it. You typically get a higher yield, gets taxed a little more, so it's better to hold your REITs in a tax-advantaged account like a TFSA or an RRSP, but that's another benefit of being Canadian. If you just hold regular Canadian dividend stocks or Canadian dividend ETFs, in a regular brokerage account, you do see benefits from that income, which is why I love Canadian stocks so damn much. But do you have an ETF that invests in these companies but is listed on the TSX? Thank you. So this gentleman's asking about things like TSM, NVIDIA. We've talked about the Semiconductor ETF SMH, which probably would have been better to buy than TSM, honestly. I keep saying that I like TSM over the entire industry because Taiwan Semiconductors makes up 50% of the chip industry, damn it. It's kind of mind-boggling to wrap your head around. Warren Buffett traded in and out of this company, a lot of volatility. It's tanking today because TSM, for the first time in like years, finally posted negative revenue numbers. It's down 15%. We're going to be discussing that in a video coming up. But if you're into the semiconductor space, I think it's going to be one of the best industries on the planet. It's causing a geopolitical war right now between China and the rest of the world as the U.S. barred ASML, the company that makes the machines, that helps makes the chips, from selling their advanced machines to China. A lot of fear with this company, right? But honestly, I don't think you should be looking at Canadian ETFs that give you exposure to these kind of companies. I notice Canadians have a hard time wanting to convert currency, but honestly, you shouldn't be fearful of buying US companies in US dollars. I always think it's a hindrance to most Canadians' portfolios because it stops them from like leveraging into the US market where we've seen much better returns, and how I built my portfolio to be around $400,000. I mean, that wouldn't have happened off just Canadian stocks. I mean, most of that was things like Apple. Well, then again, Canopy Growth Corp, I had things like MindMed, some of these Canadian companies for sure. But Apple, you know, the US stocks, I owned a ton of them. That led to a huge proponent. Microsoft, those companies made me a small fortune. I mean, Tesla, and I wouldn't have done that without converting the money to US dollars. So just buy, if you're into the semiconductor space, just buy SMH. You're only going to pay one conversion price on it, and just sit, ride it out, and see where it goes. Because year to date, the sucker's up 26.63%. So, you know, I don't think it's going to be a big deal if you pay a 1% conversion fee on the stock. I mean, it's going to get eaten up pretty quick with your gains, right? And then you don't have to sell it anytime soon. You just ride it out, long-term investments, get some US exposure. Nothing wrong with that, right? So I'll come back and do a TSM dedicated video in the future. Now, JT says, can you tell us more about your different incomes? So I don't talk about my job. I have a multitude of income sources, and I've really diversified my streams that have led into about 6 figures of income. Probably make between 100 and 200,000 this year. If I really push it, maybe even over 200,000. My business is picking up pretty crazy, but I'm in marketing. I'm kind of like Dragon's Den, you know, those people when they come in, they do their sales pitch to the investors. I'm the guy that puts the sales pitch together and then pitches it to the investors. You see this on my YouTube channel when I get sponsored videos. I also do this privately for companies. So half my business isn't even on my YouTube channel. I do interviews with dozens of companies every single week, and we help pitch the company. It's a really fun industry, and I'm glad that I've fallen into it. Maybe I'll do a dedicated video on that in and of itself as well. But between YouTube, my own job that I do outside of YouTube, and then I obviously have website income. I got just a slew of income with like dividends in the stock market. I think it'd be fun to do a dedicated video on, you know, building out these multitude of income sources that lead into 6 figures. And this took about a good decade to get into, right? It's not something that just happens overnight. But I do appreciate this question a lot. I'm sure it'd be an educational one to break down in depth. But at this point, I'll pass that question off to you. As always, let me know what you think in that comment section below.